Are we doing
We're doing it.
it? Okay. Hey, in case y'all have heard and forgot or didn't know, this is for folks that didn't know. Y'all know tariffs are paid by us
Right.
and not the country selling to us. You know that.
I mean, we literally learned that in high school. I think most of MAGA didn't graduate from high school. I mean, and for all of the lying Ivy School graduates touting Trump, putting tariffs on islands inhabited only by animals. I mean,
How you gonna tax a damn penguin?
that's all I'm asking.
You know, I mean, come on. Harvard, Princeton, Yale, all them Ivy schools, they need to have their diploma snatched back from them.
That's right. I know that's right. So
Gee.
look, hey utopians, how you doing? If you're not a utopian, why not?
Why not?
Subscribe. We're trying to get to 100,000. My name's Halisi.
And I'm Rick. Welcome to our Black Utopia.
On our channel, we talk about money. We talk about travel and life abroad. We help folks, Black folks, who are getting close to retirement age, get their money straight so that they can retire on time or maybe even early.
Early is a good thing.
Early is a good thing. So, all right, so sweetie, what are we talking about today?
So today we're talking about how Black folks trade during a trade war. Now, you know the definition of tariff.
Because we just gave it to you.
So we're going to quickly list the sectors and the industries that are most impacted.
Yes. And do not let this 90-day pause fool you, y'all. It's a distraction. Don't get distracted. I can guarantee you that 70 countries did not call the melon felon saying, sir, can I have a deal? Oh, please, sir, can I have a deal? Because we do not export a lot of crap. We do not export a lot of tangible goods anymore.
And then he lied and said they called kissing his ass. He was making a mistake of his cabinet people was kissing his ass. That's who was kissing his ass. It wasn't the countries. It was, all them folks at that stupid
That's
dinner.
right. Because we can tell you what's going on over here. We can tell you what the talk is over here in Lisbon, Portugal.
But the U.S. does export a lot of services like Netflix.
Yeah.
But that's not reflected in the numbers when it comes to trade deficits.
Now you would think, since the melon felon hired the best, I hire the best, I hire the smartest, no DEI, just WEI. And these, right? And the idiots around him should know that. They do know that. They know it. They know it only counts raw materials and tangible goods, right?
Yeah.
So either they're lying to them, or they're being disingenuous, or they're trying to make money, or all three. Who knows? But first, look, if you're new to our channel, then you might not know. Back in 2018, Rick and I got a wake-up call, y'all. And we might be getting another wake-up call soon, but we'll see. We went from negative 22,000 to over 1.1 million in net worth once we got our financial act together, because we looked at our money during that time and it looked crazy.
Crazy, just like this tariff shit that drive me crazy.
Crazy. But we did get our financial act together, all right? And so if we can do it, you can do it too. So if any of this sounds interesting to you, subscribe. As we said, we're trying to get to 100,000. Hit that notification bell twice so that you know every single time that we go live or drop a new video. And hit that like so that YouTube knows to send this information to other folks in our community, right? We cannot be the ones who are not getting rich off of the chaos. We cannot be the ones that end up, in worse shape like we have historically done. And we ain't doing that this time. Right?
Yeah.
All right. So where are we at?
So, tariffs are taxes on imported goods.
Right. So think of it like this. When the U.S. government slaps a tariff on Taiwanese chips, for instance.
Not potato chips.
No, microchips. It's like adding a tax at the border, all right? So that tax makes everything that utilizes that chip more expensive. If it crosses the border 2, 3, 4 times before it gets put into the device, right? Back and forth, before they finally configure it, it gets even more expensive. Mm-hmm. That's how it works. It's elementary. We learned it in high school. Well, we did back in my day. I don't know what they're teaching folks these days, right? I don't know. Hey, y'all, we see you guys in the chat. We love you guys. Thank you, Greta. Thank you, Action BJ. All right, the industries.
So the industries most directly affected by tariffs. Number one, automotive and auto parts.
We're pretty sure that you have heard about this, right? All right, so the tariff targets Chinese electric vehicles, which the BYD we know is one of the best in the world and is not sold in the United States. Though you can go down to Mexico and there's like 50 dealerships down in Mexico. It's going to affect batteries and the components for all of those things. So the pressure is on U.S. automakers that rely on foreign parts, like Ford
and GM.
That's right.
You know,
the ripple effect.
The higher prices for EVs could slow down adoption in mid-range markets.
Right. And so we know that EVs tend to be more expensive. Hybrids tend to be a little bit more expensive than their counterparts. This could get even worse. So watch for US-based suppliers like Axle or Dana. Now, look, we are not financial advisors. We are financial educators. Any name that we mention, any company that we mention, it's for you to research.
Do your due diligence.
That's right. That's right. If you need help with that, we have a financial education and financial independence program. It's called Beyond the Bling, and that information is in the description below. The second sector is...
Number 2, consumer electronics and semiconductors.
These tariffs target Chinese semiconductors, chips, and components for PCs, phones, and appliances. Now, where does most of the silicone come from?
China?
Oh, that's right. China. They produce more silicone than any other country in the world. And we just put 125% tariff.
Oh, it went up.
Oh, it went up from yesterday. All right. See, I ain't been paying.
I think it's 145 now.
Oh, that's lovely. 145%. Y'all, this man is an idiot. He's an idiot. Whatever has a chip in it, whatever ETFs, whatever index funds have chips in it, because they canceled the Biden Chip Act, which were building chip factories in the United States. They defunded that. So what do you think's going to happen? What do you think's going to happen? That's going to put pressure on what kind of companies?
Hey, pressure's on Apple phone assemblies in China, HP, and Dell. Is Dell still around?
Dell's still around.
I know HP was making printers.
Yeah.
They had excellent printers, but are they still there?
They're still around. They're still around making the PCs.
Damn, which one went away? The one with the cow.
Oh, perhaps. I can't even remember what that is. But Apple is still here. So you want to watch for U.S. companies with fabrications in Taiwan or Malaysia, right? Diversifying production may be a benefit, right? All right, number 3.
Number 3 is apparel and footwear.
Any surprise? Any surprise? Clothing, textiles, right? Shoes from China, right? So this is going to put pressure on what kind of companies? Companies like
Nike, Under Armour, Walmart,
of course,
and other sourcing companies.
So some brands may move production to Vietnam, Bangladesh, or Mexico, but we've got to keep an eye on that. Number 4 is renewable energy equipment. No surprise there, right? No surprise there, because the melon felon's an idiot. So Chinese solar panels, most solar panels are made outside of the United States, although, the United States had lots of tax incentives for folks to adopt solar. Not only that, wind turbines.
Wind turbines and inverters.
Right? So companies like Namaste Solar, U.S. solar installers like Sunrun, Sonova, you can't invest in Namaste Solar. It's a cooperative. But they are all going to be impacted. They are all going to be impacted. So the domestic benefit could be manufacturers like First Solar.
Mm-hmm.
So that's FSLR on the stock market, First Solar. I have not looked at their financials yet, but it's on our list to see how well they are running that company. And then lastly, number 5,
retail,
broadly, right? In general. So consumer goods of all kinds are going to go up. I mean, think about it. 50, 60, 70, 60%, something like that, of our produce and fruit comes from Mexico. And last I checked, the tariff was still on Mexico. He did not pause everything. He did not pause everything. Big box retailers, Walmart, Target, of course, that source a lot of things from Asia. Price power matters. Companies that can pass on the costs will win. So you got to look for the companies that have very, very strong customer loyalty, or where we don't have a choice. Think healthcare, think pharmaceuticals, right? The things that like we can decide not to buy a new pair of Nikes. We cannot decide whether to go to the doctor or not, although some people are having to make those choices. And that is heartbreaking in the supposed richest country on earth. Now, the industries that may benefit from these tariffs.
Domestic manufacturing.
We don't have a lot of manufacturing in the United States. We do know that manufacturing jobs grew under Biden-Harris, and they put a lot of money into bringing back some forms of manufacturing, not heavy duty manufacturing. From my understanding, it's mostly smaller manufacturers, but like chips and things like that, right? But I don't know, like it takes a while.
Yeah,
you just can't build a friggin' factory overnight. What are they thinking?
And even
if they were to buy up old factories that had closed, as I said at the beginning, I've worked with companies that were trying to change their line to create a product differently, and it takes a lot of money. Shout out right quick to Dennis. Thank you very much.
Thank you, Dennis.
On Thursdays, we don't tend to read. No, we don't. We don't read. We try to keep it short and quick. But we have to give a shout out to the folks who support our channel and support our community, because all super sticker money goes to our scholarship fund for Beyond the Bling, our financial independence program. And so definitely got to give a shout out. All right, so domestic manufacturing. So we're looking at companies like Nucor, Steel Dynamics, and Ingersoll Rand, okay? Let's look at their financials. Let's see what that PE ratio is. Decide how much money you are willing to spend to earn a dollar. I try to keep it under, it depends on the industry, but under like 35, especially for smaller companies or for slow growing companies, or companies that are very, very mature. Right, and they've passed that hockey stick. What's a company that's very, very mature? Like a Procter & Gamble, like a Coca-Cola, right? Even an Apple, very mature. All right. Number 2, U.S.-made construction materials. The winners.
If tariffs hit foreign lumber and steel and cement.
Okay. Of course they are, because the Canada tariffs are still going, and we know Canada supplies a lot of the lumber for housing and whatnot, right, in the United States. Thankfully, our green brick stock is still doing well. But I think that that's because they have maintained not that much debt in relationship to their equity. I'm watching it. And we're also checking out companies like Martin Marietta and Eagle Materials. Mm-hmm. All right. So that's construction materials. The other thing that we didn't talk about, I don't think we mentioned, I think I forgot to put it in, is about the food and the food production in the United States. So that's going to hit all of the grocery store chains and everything, and every restaurant industry, right, is going to be affected by the fact that to produce the food costs more money, because potash, whatever the hell that is, that comes from Canada is now more expensive. Apparently that is a key ingredient in making fertilizer.
Yeah.
All right. I have no idea what it is, but I do my research. So I can tell you the words. Okay. So farmers can't get that at the same price. That means to grow the vegetables and fruits, it's going to cost more. They are going to pass those costs on. And the crazy part about it is grocery stores have a very, very, very thin margin, which is why we're not really invested. We're not invested in any grocery store or anything that has food that can go bad. Okay, restaurants, all of that, very thin margins, very thin margins. All right. The other industry that could benefit
is defense and aerospace.
Well, of course. Of course. But we're not investing in Starlink. That's what we're not doing. We're not investing in Starlink. We're not investing in anything that has to do with a white supremacist Nazi apartheid king person. That's what we're not doing. I don't care. And people are canceling his contracts anyway. He's going down. He is going down. He is going down. They are rebuking him over here. They're rebuking him over there. They're rebuking him. People in the UK, they're up to the scale. He's trying to buy the election in the UK, just like he tried to buy the election in Germany. He's evil and he's got to be stopped. So we're not investing. We are not participating in X or anything that has to do with that person. So we're looking at Lockheed Martin. We're looking at Raytheon. We're looking at Northrop Grumman. All right. So that's what we're looking at in defense and aerospace. And then domestic tech and infrastructure.
You know, if foreign chip makers are locked out, more incentive to find funds U.S.-based fabs.
Why you beating your thing?
I don't know. I just
can y'all hear that?
No,
can y'all hear that?
It's better than picking my nose.
Yeah, definitely. All right. So the winners on semiconductor, we're looking at Wolfspeed or ETFs like stocks. All right. Those are the kinds of investments that we are looking at. Now, what are we doing?
We're going to continue dollar cost averaging and put extra money to buy the dip in broad index funds.
We may be looking at some other small companies, but in general, that's what we're going to do. All right. And when we buy specific ETFs and or companies, they're going to be companies probably in the BRICS nations or something like that. Okay, that's what we're doing. And we're going to talk more about that on Sunday when we also bring up crypto. All right, so continue dollar cost averaging and put extra money to buy the dip. Add to S&P 500 or a total stock market index fund or ETFs during this turbulence. Because the thing about it is, folks, if tariffs don't change the value of a company, all right? If a company is run well, if it is managed well, right? Like if they are offering a product that people want and they're offering it efficiently, right? And they're building that customer loyalty. A well-run company that adds value is a well-run company that adds value, all right? Yeah. And so this nonsense that he's doing is not going to affect whether it is a good company or not. However, when we're talking about investments, remember, y'all, this is not money that you're going to be using in the next 3 to 5 years. All right. We're going to have to ride this thing out. And that's why Rick and I saved 2 years living expenses. We now have 2.5 years living expenses saved in cash or near cash, money market account, CDs, high yield savings account, like that. Right. Because I don't know what the melon felons are doing. I don't know. Number one. Number two, he is devaluing the dollar. So for anyone who wanted to move abroad to a place that has a higher value, like a Singapore or Europe, we're looking at that fluctuation in the value of the dollar very closely. Now, let's see when China says, you know what? You know that money we you borrowed from us? Yeah, we want that money back. We want that back. Let's see what happens. But in the meantime, in between time, if you've got let's just say $100 a paycheck or $100 a month going into your 401k, $100 a month going into your IRA, into your brokerage account, do not stop. Do not stop. All right. As a matter of fact, there's a couple of apps that tell us what Congress is investing in. Look at those apps. Look at those apps. Find the index funds and ETFs that contain the companies that those people who are doing insider trading, because that's what they're doing. That's what they're doing.
That's exactly what they're doing.
Because that's what they're doing. All right. And do what they do. Just like that. Just like that. So, target sector ETFs that get hit the hardest. All right. Certain sectors like tech, etc., right, are going to be disproportionately impacted by these tariffs. When these drop irrationally, because what the stock market, the folks, the traders, the day traders, and all of that, the people who are making the market move, what they are anticipating is that we will not ever be able to buy this stuff again, right? They're saying that Apple will never be the Apple it is today. Microsoft will never be the Microsoft it is today, et cetera, right? That's what they are saying when the stock market goes down, based upon these tariffs. So, and that's because they're playing for the short term. We're not playing for the short term because investing is not gambling. Day trading to me reminds me of gambling, right? You shorten this, you betting against that and betting for this and all of this other stuff, right? Work. What we do is we find great companies that have value, that are undervalued, and we buy them, and we keep track, make sure that they keep being managed well, right? And that the numbers make sense and that they are generating what we expect them to generate, and we hold on to them for the long term. That's what we do. All right. We don't try to time the market or do any of that nonsense, because the people who try to do that, by and large, never, ever, ever win. All right. So when these drop irrationally, we're researching sector ETFs like
XLI Industrials,
SMH, semiconductors, and
XME, Materials and Mining, Metals and Mining.
Metals and mining. So look for high quality names within those ETFs that get dragged down unfairly. All right. Number 3, look for undervalued small and mid cap companies. Tariff policy uncertainty often leads to overreaction, especially in smaller companies. Now, the small companies that you've been seeing on the news, the ones who are like, $3 million companies, $4 million companies, they may not be around if they have not prepared for this. And it just breaks my heart, right? If you just, you're creating something really cool and you figured out a manufacturer overseas to produce this for you so you can build your little store, et cetera, et cetera. And now what cost $60 yesterday is now going to cost you $125. Wait, 165 tariff?
145.
145 is now going to cost you.
That's today.
Okay, so yesterday it would have cost you $125. I did that math. Really? How can a small business afford that? How can a small business afford that? They cannot. They cannot. However, small businesses and mid-cap businesses that are traded on the stock market are not what we consider small businesses, because they have about 500 employees or so, right? And so I look at, for the high margin cash generating small to mid caps with strong moats. We talked about moats, right? Mm-hmm. Barriers of entry and little direct China exposure.
Yeah. Screen for low PE ratios, high ROE, and low debt to equity.
All right. I don't know. We practice this so much. I don't know if did I talk about moats live?
No.
Okay. So moats. Picture a castle with a moat around it, right? You have to get through the moat to storm the castle, right? So companies that have built enough market share and have innovated enough so that barriers to entry become really wide for competitors, that's the moat.
They've insulated themselves.
They've insulated themselves from the competition. Okay, so that's what we are looking for. And then screen for low price to earnings ratios. We said price to earnings means how much money you will make on how much will it take for you to earn $1? How much will it take for you to earn $1? So a PE ratio of 30 means it takes $30 invested for you to own $1. 6 ratio, $6 to earn $1. All right, that's how that works. And then ROE is return on equity, and low debt to equity ratio. All right, we know what that is. Examples might include regional manufacturers or niche tech providers overlooked by big money. If you want ideas, if you have the time and are brave enough to invest in individual companies, we suggest that you join Better Investing, which is a nonprofit organization that basically started the club investing movement. They have great tools and tons of education. That's what they're into. They're not selling you anything else but education and tools about investing. All right. And it is chock full. Number 4.
Diversify geographically.
Trump's trade war is mostly U.S. centric, y'all. So
I'd increase exposure to the international developed and emerging markets, which may benefit from redirected global trade flows.
Well, we already know that. We talked to you about 5 weeks ago about BRICS, right? Maybe a little bit longer than that, back in January,
Yeah,
about BRICS. All right. And so go watch that video if you haven't watched that video. BRICS stands for Brazil, Russia, India, China, South Africa. And there are about 15 more countries that have been added as either members or trade partners. This is the southern part of the globe, all right? And they are working around the United States. Just like Canada is now working around the United States, just like Europe is now working around the United States. This is serious, y'all. This is serious. So ETFs like VEA, developed markets, or VWO, emerging markets, offer diversification and are undervalued during US-centric crisis. And so that is what we are researching. Number 5.
Focus on U.S. companies with pricing power.
I keep saying this, but we ain't paying them $3,000 for no phone. That's not going to happen. So tariffs raise costs. Companies that can pass on those costs, pricing power, will weather the storm better, right? We know which companies those are. Those are the companies that either one, you got to have it, healthcare, pharmaceuticals, right?
Mm-hmm.
Or that have built up that customer loyalty. I'm not buying no PC and I'm not buying no Android. I'm just not. I see my friend and some things are really easy and cool, but sometimes she's got to do 10 clicks for what takes me 1 click. I ain't buying it.
You're just an Apple freak. You're Apple head.
Yes, I am.
Yeah.
Yes, I am. Because it's idiot proof, y'all. It talks to each other. It's idiot proof. Apple has always been idiot proof, and that's why I like them.
They have a universe.
You know what? They probably wouldn't like me saying that, but they are. They are. All right. Number 6, use turbulence to tax loss harvest. All right. So this is what we're talking about. If you are already invested in the stock market, if you are one of those people who owe taxes every year, sell the stuff that is going down at a loss and reinvest that money in the things that you believe are going to grow, right? Or reinvest them in sectors where you believe they're going to grow, right? So you can write off those losses on your taxes and then reinvest that money. And that may help you out. So that's something else strategy-wise that you can do. And then lastly, and here's our final thoughts.
You want to keep cash.
Yep.
You got to keep cash or near cash. Bonds, ETF, as dry powder.
Yeah. Bond ETFs, right. So hold on. Look, we just said we have 2.5 years living expenses in cash or near cash because I don't like the uncertainty that is going on right now. And we've got the melon felon fool who has been really talking about tariffs since the 80s, 90s, something like that, when he still had hair. So this should not be a surprise to anyone. And once I knew that it was a close race, we stopped spending on unnecessary crap. I started watching and just like minimizing extras, staying in the house more, finding other ways, take up a hobby that's low cost, right? Things like that. Because every single time, memories are so short. Every single time he brings uncertainty. You might have forgotten about 6, 7, 8 years ago. And every day it was something. And every day the market was up and it was down. It was up and it was down. And the only reason that the stock market didn't crash is because somebody snatched the reins out of his hand when he still had a couple of adults in the room and said, that this is going to do X, Y, Z. And they did not let him do that. But the training wheels are off. The guardrails are off. This man is out of control. And on top of that, we see our country going into an official autocracy. Right? So stop spending on unnecessary stuff and keep that cash to buy long-term assets at a discount. And that's the other thing. Don't buy them new shoes. You don't need no more shoes. Baby may need some shoes, but you probably don't need no shoes. All right. Take that shoe money, invest it. Right. Take that extra meal out and invest it. Millionaires are made during times like this. All right. Millionaires are made during times like this. And we want every single one of you watching to be in a better financial position once the melon felon is gone. Hopefully, we have another election, or when you move out of the United States, or both. So turbulence is the long-term investor's friend. It really can be when viewed through the lens of valuation and patience. So the melon felon's policies may shake markets, obviously, but a well-run company that consumers value will weather the storm. All right. So do not panic.
Stick to your investment plan.
Right.
Buy quality when it's on sale.
That's right.
And don't try to time the market.
Do not try to time the market. All right, y'all. So that's all we've got for you today. On Sunday, I'm saying crypto is a con. It's a scam. If you believe that it's not, talk us off the cliff. Send us an email and we might have you on to debate on the channel. hello@ourblackutopia.com. No trolls allowed. No trolls allowed. All right. So if I don't know your name and you don't tell me what your handle is, because you've got to be a utopian. You've got to be somebody who watches. You can't be so right. Like I'm not putting no trolls on our channel. I'm not putting no trolls on our channel. But I want to hear what you all have to say. And then we will talk more specifically about some things, some other things that we can do to make sure that we are protected. All right. With that, if you have more questions, we do one-on-one coaching. You can find that information in the description below. If you need help with your financial planning or your move abroad plan, all of that information is in the description below. And for those of you who are coming to our meetup in June, T-shirts will be for sale in a minute. So start checking your email and the WhatsApp chat and all of that stuff. Because we've got some beautiful T-shirts and tote bags and everything else for the meetup people only. We don't have merch yet. All right. So stay tuned for that. And with that, we will see you on Sunday. Bye. Love you.